All right, I'm here looking at the DXY. Take a look at the VIX. This is the inflation deflation sort of episode, I guess. Also, just kind of more kind of warnings on the where the market is right now, other than the GameStop thing, which could maybe destroy the whole market thing. Like this is the normal kind of trading patterns that tend to affect the market pretty big. So this is the DXY. This is the dollar index, and the smaller trades, the smaller swings in the dollar tend to swing inverse to the S&P. So it looks like here we're getting a little breakout, and that is generally not good for the general market. So like this last breakout that we had here was the Volmageddon in 2018. That's kind of where we got into the beginning of that zone. Also on the S&P here, we got into this big zone here in the beginning of 2018. And this is exactly when the dollar broke out. We had a big volatility rip here. And, and then we got into crazy land. And so this doesn't look like a huge, like, upward rip like this. And I think we still have positive growth right now in the economy. So I don't think it's going to be like Volmageddon 2.0 or something. But I mean, if this thing rips vertically, it could be crazy. But anyway, that could be a potential bottom on the dollar, which we were in an inflationary run. This crazy wobble here is the 2020 crash. The dollar went and then we had a weakening dollar over this entire period where we had the stock market going up, and it pretty well inversely correlates with the movements up and down in the stock market on the way up here. So this is definitely a thing to watch, especially if it breaks above this moving average. Anyway, that's the dollar, the DXY, and then usually the DXY is not a good leading indicator of the stock market. Like we already saw the stock market pull back, and the dollar's getting strong at the same time. But the interesting thing today on the S&P is that we came down and we tested the top of this volatility zone, and then we came right back up, and now we're testing the bottom of this channel. But like this big green candle is in the same direction as the DXY, which is not what usually happens. Like we're getting an aggressive move the wrong direction on the S&P relative to what the dollar is doing. So that's, I don't know what that is. I mean, either the DXY is just going to like turn and break down and follow this, or this thing's going to break down and the DXY breakout is going to be real. But if we do get a bottom here, like a longer term bottom, this is 2018 when it broke out here, and this is 2020 here where we had the big market crash, and it broke up sort of into the market crash there, and then we had the big bull market run here that correlated with this down move. So yeah, this is basically a deflationary thing. So if the dollar is weakening, that means that it's inflationary as far as the dollar relative to other currencies. Like the more dollars printed, then other currencies are being printed. And so it's kind of a relative thing in the international banking world, but it does correlate with the U.S. stock market. And then I want to take a look at the VIX also, because these two together are pretty wild. And so this crazy spike in the VIX here was the 2020 crash. Let me go back and check out here. This one's Volmageddon. So this is the first rip on the volatility zone, and then we had like the little follow-up breakdown in 18. Oh wait, this one's Volmageddon. This is 18. No, December. Yeah, this one at the beginning of 18 is Volmageddon. and then we had a lower one here, which followed. It was like the fake breakdown at the end of 18, and so these volatility spikes correlate with big down moves in the stock market. But I mean, this guy is monstrous. This is the 2020 crash, and it looks like you can't tell from here. Let me get in on hourly candles probably. Yeah, here's the last. So we've gotten a couple of kind of breakouts here on the VIX, and they've just kind of trended down and fallen off every time. There's been 3 or 4 of them. But this one has now set up, and it looks pretty mean. So this one has gotten up, and it's gotten higher and higher support now. It's got 3 bounces off an increasing trend line, and so that looks like support for a VIX breakout to me. And the dollar looks set up for a dollar breakout too. So those two combined look pretty ugly for the market. If the VIX blows up, you're not going to get like advanced warning. Like the stock market is going to get a huge red candle, and then you go look at the VIX, and the VIX is up. That's not super helpful. But the dollar breaking out, usually you don't get a good signal off the dollar. It sort of just trades opposite to the market, but we have like a really good breakout pattern on the dollar right now, and it just broke out. Not only did it break out of this down channel that it was in, it set up a squeeze, and it's like breaking out and then back testing the top of this channel. So I mean, that looks like it's set up to make a decent move to the upside. So this could have been our dollar bottom back here, and this could have been the top of the stock market right here on the bottom of the channel. Potentially, if we get a down move, it's a lot easier to like look backwards and be like, oh yeah, that was like the top. But the odds that the stock market top just went way up today, looking at these. And put calls, yeah, and then we're coming off like an epically big put call ratio too. That was at the top of the peak a couple days ago. And so, the put call is still just wobbling around, and it's pretty bullish. It's still high call ratio. That second big candle kind of swung the put calls, but anyway, the market tops generally correlate with a super high put call ratio, and we got one here. So I think this is a good time to be worried about the whole market and trying to figure out which things are going to go which direction, because you could have silver going up and stocks going down, and this is not investment advice. Please hit the like button. I don't know. That's kind of hard. It's hard to spot the changes in direction, and then it's even harder to figure out like what the real market conditions are, and kind of how to allocate your portfolio. It gets tough. It gets tough when it switches. But this is when you do the best, if you can get puts on stuff when everyone's long, and if you can get calls on stuff where people are on GameStop, where people are illegally, fraudulently short. So GameStop today, I looked at this one earlier, but GameStop just came down and looks like it found support on this bull market trend line. And so this could potentially run uphill regardless of a short squeeze. It looks like a bubble support line to me. And, if it starts bubbling up off the trend line, even if the short squeeze situation doesn't squeeze like parabolic like everyone's saying, the chart still looks like it's likely to do another bubble move. So that's that thing. I don't know if that's like a threat to the market, if they are shutting down trading and who knows what else. That could be bad, I guess. Yeah. So that's the inflation deflation look for right now. Is it looks like we're switching into a deflationary period, and I think we still have growth up. So this would be like if you watch Hedge Eye, this looks like a swinging into quad 1, which is inflation is down, but growth is up, and that's called like Goldilocks. And that's a condition where things like copper do well. What would silver would be should be good there. That's the best quadrant for silver as well. So this silver breakout thing was not orchestrated by Wall Street Bets. Everyone in there has said no, we didn't do that, and has deleted those posts out of there. Someone just kind of got into the Wall Street Bets forum and posted the silver theory thing. I mean, the silver squeeze is not a new idea, or the silver short squeeze, whatever. But I don't know if like hedge fund people snuck in there and posted the silver stuff, or if it was just a less active user that posted a short idea, because there's a few short ideas floating around that are newer in there. But anyway, it looks like it is picking up steam, the silver thing, and all the silver stores are sold out. Even like my order, I ordered on Saturday, I ordered bullion from First Majestic, and they haven't charged the card yet. And so I hope they don't cancel the order. But like I put the order in when it was 30 an ounce, and now I don't know what it is, like 35 or higher. But yeah, there's like a huge run on all the silver, on all the physical silver, and then huge flows into SLV. And so yeah, if we switch into tighter inflation, if we go a little bit disinflationary or deflationary, that's okay for silver. But if you also have down growth, then you get into kind of a liquidation sell-off, and then silver doesn't usually do well in those conditions. Like silver will sell off just like anything else in those conditions. Like only the dollar is good in those conditions. So yeah, so this is kind of tricky. If we do get a deflationary swing and the dollar's going strong, well, that means dollars are good. So like treasuries will be good, and dollars will be good, and those will be safe from a crash or anything like that. And then depending on if growth is up or down, like if growth is up, that's good for commodities. If growth is down, it's bad for pretty much everything. And so it looks like growth is up, and it looks like a stronger dollar. That's what it looks like to me. So I think we're swinging into quad 1, and I think it's going to be like a commodity kind of setup. And silver looks like it's on a hype train. I think silver is actually going to do pretty well, regardless of the GameStop short squeeze. People saying that they're it's not their thing, or it's like a conspiracy or something. I don't think it's a conspiracy. I think that it's just a different trade idea that got posted in there more recently. But yeah, SLV, not SLV, because I went like way off track from talking about the dollar, I guess. But yeah, SLV is backed by JP Morgan, and there's more paper shares out than there are actual silver. And then if there ever was a run on the silver, like you're not getting it from them. I mean, they'll just collapse that fund, and then who knows? Like maybe you have to try to get your money in court or something. Like if there was a real short squeeze on silver, the SLV is not where you want to be. You want to have physical, or maybe the PSLV, like the Sprott Physical Fund, would be okay. I think I would feel safe enough with that one. Like I don't think it's gonna be a run on silver where it like really destroys anything, and I think it'll just be like a bit of a bubbly silver bull run right now is what it looks like it's setting up for. Yeah, I guess that's the idea. I've heard people say that you can do silver futures contracts and demand delivery on them. I don't know how to do that, but that would be an interesting thing to try to figure out how to do. And then you get those bars, those huge silver bars that they stack at the bullion bank or at like JP Morgan vaults. I don't know if you can actually get one of those, but that would be kind of cool. Yeah, let's check out, I don't know. Oh, Bitcoin. Let's look at Bitcoin for a second. If my mouse works. All right. Yeah, so I had a trade setup video on Bitcoin a minute ago, like the last couple of days. We had this breakout that they said had something to do with Elon Musk, and every time somebody says something like that, I'm just like, no, it's just the normal trading chart. Like this had a huge run up and then it had a big consolidation kind of pennant, and it's like the pennant could be a bear pennant or a bull pennant. Like more often than not, the pennants are bullish, like 60-40, not like 80% of the time, but more than half. They usually go bullish. But we just had a huge run up and we're away from support lines. So a pullback in Bitcoin would not be surprising, but we got a bullish breakout on this consolidation and we've held above now. And so this does look even way more bullish now. This looks like a good bullish setup on Bitcoin. So that's kind of where it is on Bitcoin. I like that chart. That's a bullish chart. But I mean, this is a wild run up, but I mean it can go crazier. We've seen Bitcoin go parabolic more than that last one that was big. I mean, there was big parabolic moves in Bitcoin back in the day too, that before anyone really knew what it was. Bitcoin is prone to big parabolic moves, and it would not surprise me to see this thing shoot out. So that's some different things. Like I think right now is the time to figure out like what the market's actually doing and try to figure out what kind of economic zone we're in here. And to me, it looks like growth and deflation is what we're doing. And I don't know how Bitcoin does in that environment, but it probably doesn't matter that much. It's just kind of a safe place to go. Oh, well, I mean, Bitcoin sold off during the last big crash. So if it goes into like down growth and deflation and it really does crash, Bitcoin would probably pull back in that case. But other than that, I mean, I think silver and Bitcoin are looking pretty bullish right now. And I think the dollar is looking bullish. And I think that GameStop is looking bullish. And literally everything else is scary. Like dollars going strong it's treasuries are good, treasury bonds. And then Bitcoin always risky, but it looks like a good setup. And silver is always held down and people have been complaining about it for a long time, but it does look like a bullish setup and it's plenty of hype right now, which I don't know if that's a good thing or a bad thing. It's either like a pump and dump or it's like the beginning of a bubble. So definitely be checking that out. So that's kind of what I'm thinking about allocations right now. I would say if you're not sure or you're limited in options of like what to do, like I have a little 401k account that I it only has like $1,000 in there, but it has pretty horrible options for different things to invest in. But one of them is treasury bonds, and so like I just moved my 401k into treasury bonds today, just to see kind of what's going on. Like if there's a big pullback, I don't need to be losing a chunk of my 401k for no reason. Because we'll probably find out in the next couple of days if there's a big pullback or if this GameStop thing blows up or whatever. Treasury bonds are a good place to park. So, yeah, all right. That'll do for now. Happy trading. And yeah, watch the market. Watch it. it's crazy. It's crazy again. I mean, the big bull run was crazy too, but this is a different kind of crazy. We're just switching into different conditions, it looks like, and just trying to figure out what's going on.